Good evening, everyone. Thanks for joining tonight. Last week, we ended our roundtable, going around the table, asking everyone's sentiment for the upcoming week. And it looks like the unanimous bullish worked out well, as we're up 5.82% on the week. Took a little while chopping sideways before we made the move, but positive nonetheless. Good evening, Crazy. What do we have on the agenda for tonight?
Well, today's stream, we're going to have an important topic that we wanted to get out to everybody. Now that the bull market is approaching, we have to make sure that our listeners and viewers stay safe. So today, the stream is all about limiting your risk in crypto and different things you can do to make sure you protect yourself from either being scammed or lose money in the space. Before we get started, I'd like to thank everyone for joining. Don't forget that today's stream is not financial advice. It's strictly for entertainment and education purposes only, but we are glad you're joining us today. Now, I guess we'll talk about the markets in a bit, but I did want to mention, you mentioned that the sentiment is bullish right now after last week's stream. It's a pretty slow week, but today things really picked up. And something I came across in a video earlier is, for those that don't know, it is Chinese New Year. It is the year of the dragon, apparently. I don't really follow the Chinese New Year's, but they also say that between beginning of February until February 15th, each and every year, Bitcoin has a bit of a spike, a bit of a pump. Every single year it has been in the green in the first 15 days of February. As a matter of fact, some numbers here is that, let's see, the highest being 21%, 16% is the average, and the lowest being 4%. So for the first 15 days of February, Bitcoin has always seemed to rally, whether we are in a bear market or a bull market. I thought that was kind of fascinating. I'm not really sure why. Tradition or superstition in China. I'm not really sure. You have a take on that, Mr. Depp?
No, but it seems to be rhyming right now.
Yeah.
History doesn't repeat, it rhymes.
I just thought that was a crazy stat that every single year, whether a bull market or a bear market, Bitcoin rallies in the first 15 days. I thought that was kind of neat. So I guess we'll get right to it. We'll bring up our panel. We'll start off this week with CryptoCruizer. How are you doing this week, sir?
Not too bad at all. Enjoying the pump in the market.
Good. See what else we got. Chart Davidson, how are you doing, sir?
Good evening, and how are you?
I'm doing well. How are you?
Waiting for this market to start. It's been like trying to do something and then not trying to do something. I don't know. We're in a weird spot, but I think good times are ahead for sure.
I agree. We chopped sideways for quite a while there. It was getting really, really boring. I think a lot of people were bored to death. They were sleeping on the market. And then, of course, days like today, when you have sideways chop for that long, you get a pump out of nowhere. It's great to see.
For sure. And the thing is like, I declared a February pumpuary, right? Mm-hmm. And we haven't had anything yet. So it's like, let's go, guys. 8 days in. Let's go.
That's right. I had to speak on your behalf. You weren't able to speak last week, but I did mention pumpuary. And then the other one we like to do is, was that Pumptober? I think that's
it's October. Yeah, October. That's right.
Bad, yeah. Okay, and we have one final guest. I'd like to welcome up Oxaria. How are you doing, sir? Probably got his mic on mute. Mr. Ox, how are you doing, sir?
Sleeping.
Yeah. He tried to unmute. Okay, well, we'll get back to him. So, so everyone knows this week our topic is going to be how to limit your risk in crypto. So I think what we'll do is we'll start off with the roundtable. Then Dip, you and I will chime in. I've got a few things that I'd like to mention if they're not mentioned by the panel. So I'll start off with Cruiser. What do you do in your crypto investing, whether it's in blue chip coins or whatever it may be? What do you do to minimize your risk?
Well, I like to think of myself as somebody who enjoys taking risk, but I have noticed when it comes to the crypto space, I mean, like everything else, I do research. I research everything. But I steer away from getting into anything new until it's kind of developed and secured itself. And I realize that's still not any kind of guarantee, but I just don't. I don't even dabble in anything that hasn't proven itself, I guess. I stick to the safe bets, I guess, if we can even call them that. And again, like I started off, it's just researching those, and that's how I determine whether it may be a safe bet.
That's a really good idea, actually, because one of the biggest mistakes that investors do is they hear about a coin or a token or a project that's pumping, and based on FOMO alone, they get in, and 9 times out of 10, when you hear about a project or hear about something new pumping, it's already too late. So the best thing to do is, like you said, wait. There's always a pullback, there's always a dip, and that's the best time to get back in or get in.
Yeah. So that's about my only strategy for limiting risk is just research and wait.
Fair enough. Chart, what about yourself?
Just being diversified, right? You really don't want to be putting all of your eggs in one basket. Mm-hmm. So fundamentally, you got to do a lot of research. That's the most important thing in crypto, is just doing the proper research. Try to follow money, where money is going, right? And then completely diversify yourself, because you really don't want to put everything into one space. We have so many things now that we can do in crypto that will mitigate risk, and putting all of your money into like a meme or NFTs or all of it in DeFi is really like betting on only one failsafe, right? And so if you were into a whole bunch of little things, it kind of like completely mitigates all the possible risk because crypto in general is fairly risky until we have some way to govern ourselves, because right now, because everyone's anonymous, it's really easy to walk away and there's no retribution of any sort. So how do we govern that? Until legislation comes through, we have to wait. So until that happens, just mitigate risk by diluting your positions as much as you can into different things, whether it's DeFi, whether it's even NFTs if you want to do that. Mm-hmm. But for myself, doing a lot of fundamental research, right? And then finding the proper projects and put money in, understand the type of play you want to be in or a part of during the rise in the bull market, and again, it depends on the time period. Where are you in the space? Is it a bull market? Is it a bear market, right? Because there's different strategies for both. Like for bear markets, you can literally put all your stables into accruing liquidity pools, for example. Now there are so many of them out there, and make money this way. But yeah, there's way too many things. But yeah, diversifying and researching fundamentally to see what projects you should buy in.
Smart. One thing I will recommend, and I recommend to anybody, crypto is a vast, we'll call it ecosystem, because there's so many moving parts, there's so many different things. You can never master any one thing quickly. It takes a long time to really master any one sector, whether it be DeFi, whether it be specific coins, or any whatever narrative it is at the time. Like right now, as you had mentioned a couple of times, oracles. You can never master everything all at once. You got to make sure you take your time and do your research properly. Oxmaria, have you fixed your mic? Are you with us?
Yeah, I think you guys should hear me now.
There you are. How you doing, sir?
Doing great. Glad to be on here. Hello to everybody.
Hello.
Glad to join you guys. It's been a while since the last time I've been on here.
Yeah, it has been a while. I wanted to ask you what we'll continue our current narrative, but I did want to ask you how you doing and what's new with you. What do you have going on?
Well, I've been working in DeFi. For the most part, I've been testing for the past couple of months on testnet with interesting stuff. Most primarily with LP pools and just true DeFi stuff, which is going to have actual value going forward in the DeFi space and in crypto in general. Because I see a lot of people mentioning about ROI dApps and stuff like that, but I think that's all in the past. And I've always been want to actually deliver value in the space for the communities and everybody in. And so that's what I've been working on. I've been reading a lot on how other protocol works, and what mechanics they have been implementing, innovations and so on, trying to implement them myself. Currently building something on Arbitrum 1, and excited about that. It's definitely going to be interesting and engaging throughout the year. So
awesome. Yeah, that's actually really interesting. With you getting involved with Arbitrum 1. For those listeners that don't know, Oxfrey is a developer in the DeFi space, and he's currently doing his best to get back to the space. He's going to be launching a project pretty soon, and actually Dip and I are going to be doing a video on that. We'll go more in depth, and that should be fun, very fun to do, actually. So when it comes to mitigating your risk in DeFi, Oxfrey, what kind of a strategy do you have?
Well, let's take investing specifically in DeFi. Let's exclude like blue chip holding and all of this. Like, let's say directly DeFi, right? So we're not gonna mention blue chip holding because I do have blue chips, but let's talk about DeFi specifically. I would say if you want to be successful, like investing in yield farms, LP pools, and all these DeFi protocols which generate you yields and whatnot, I would say same as Chart D said, diversify. I've always propagated for diversification of your bag. Like even the fact that I'm doing my own projects, right? I've participated in other teams, building their backend and everything. And even though that I'm directly involved with specific projects, I always say to everybody on there, like, don't keep your entire bag on here, no matter how good it is. And a lot of people that have been following me for a while, they know this. Like, no matter how good it is, I do believe in the product, but at the end of the day, it is DeFi. Like, it is experimental. This is quite new in general. The best plan that you should make, the best plan that you could possibly have is just to diversify. Whenever you enter a project, just make sure to ROI from that project as quickly as possible. Diversify, have a bag if you still believe in it, keep yourself informed about it, of course, but ROI as quick as possible, and diversify into other projects, but always make sure that you take a deep dive into what you're investing in, because there's a lot of tricky systems out there that don't really advertise what they actually have. And I've seen this with numerous protocols where they advertise specific, let's say, daily percentages and whatnot, which actually is not true. And it's super tricky because they put other mechanics which don't allow you to earn that percent. Always, you see all these people in the space talking about passive income. I don't believe in true passive income. I believe that, as a whole, no matter what you do, whether it's in DeFi, whether it's in crypto as a whole, or real estate, it's always gonna need maintenance. You're always gonna have to check whether that DeFi farm is good with liquidity. You're always gonna have to check if your real estate is good, like if you're renting out apartments or whatever. You're gonna have to maintain it. So it's super important to apply this when you're aiming for passive income. Like, don't just expect it to leave it and it's gonna keep going. You have to maintain it. You have to keep track of it, and always keep yourself informed and updated to the status of that passive income. Otherwise, it's just gonna wreck you.
Agree. Yeah, you can't just set it and forget it. That's the same with any investment. I mean, you got to put in the work to be able to get the returns. That's 100% correct.
yeah, there is no true passive income in the sense of it.
Right. Okay. I'll go over the list that I have, and then Dip, if you have anything to add as well. I know you are more of the traditional finance guy, so you might have a little bit of a different insight. But it's funny. My number one thing on my list, and you've all mentioned it, is do your research before investing in anything. That's the number one thing you have to do. Don't just ape into anything. Make sure you know exactly where you're putting your money and exactly the type of returns you're going to get, because when you start aping into things, that's when you lose money. Okay, so I want to go into other specific things, like for example, everyone.
Don't care how I mitigate risk. Come on now, don't forget about me.
Okay, all right. How do you mitigate risk? No, I wasn't finished. I had other stuff to my list,
okay.
And I was going to come to you.
Go ahead then. Go ahead.
Okay,
I'll be patient.
Continuing on to how I mitigate risk. Everyone knows I'm into liquidity pools. And the number one thing you have to watch out on that is nowadays most protocols, when you do provide liquidity, you get an NFT. NFTs are being used for a lot of different things nowadays. The problem is a lot of these protocols, when you get that NFT, they're attached to a phishing link or a scam NFT where they claim to have rewards that you can claim. For example, recently we had the Jupe launch, and there was an airdrop for anyone who used their platform prior to, I believe it was early November. So, and anyone now, when you get into the liquidity pool, sometimes an NFT will be dropped into your wallet. You look at it, and it claims to be given free rewards. Do not click on those scams. They will empty your wallet. So don't click on any links that you aren't sure about, nothing fishy, and make sure they're verified. The other thing as well is on social media, especially Twitter, there's a lot of pre-sales that, quote unquote, I use that term lightly, going on where, they have a website which is very generic, and they, you send your funds to a wallet, and then when the pre-sale apparently ends, that's it, they're gone. They take all the funds. A lot of those are going on. So the way to mitigate that risk is check to make sure that they have socials, the Telegram, Discord, Twitter. Hop on those socials and make sure they're active. Don't just hop on if the chat is muted or if no one actually seems to be there, real people, if it's all bots. If there's no activity, avoid it, because 9 times out of 10 that will be a scam for sure. Before aping in to anything, and the other thing is make sure you ask questions from the team in those socials, and if they are able to answer and they seem like they're engaging, might be a good sign that it's a legit project. Never listen to people like Boy the Dip and I. Don't listen to influencers. Don't listen to anyone who is shilling the next hot thing, because they're only there to fill their bags. Not gonna lie, we are not. We're here to bring education and awareness, but a lot of YouTubers out there, all they're trying to do is get referrals and shill pump their own bags. So don't do your research by watching these videos to kind of get an idea of what the project is, but don't go by what they're saying. Don't go by their word. Use a bit of judgment there. And then I mentioned to Cruiser, never FOMO buy into anything. By the time you hear about a token that is doing really well and pumping, it's probably already too late. Don't ape in, because more than likely than not, it's going to have a pullback and a dip, and you will be left in the negative for a little while, kicking and screaming. And like a lot of other people do, they sell at a loss, which makes absolutely no sense to me. So don't ape into anything that you hear is the hot token of the day, so to speak. And stay away from, Ox alluded to it, stay away from the typical Ponzi type ROI dApps in DeFi. I call it the TG DeFi is what I call it. That used to be the way to go, and if you were lucky, you got in early enough, you made money. But they're great if you're an early adopter and you get in early, but it's really not what true DeFi is all about. So stay away from those Ponzi type style projects that you find on Telegram groups and stuff. Now there are some that are starting to get wise to it, and they're launching with actual utility, their own tokens and revenue generation and stuff. Those are a different story. I'm talking about the Ponzi miners and that sort of thing. So that's pretty much my list. Now, Mr. Dip, could you add anything to that?
Well, I mitigate my risk by being a boomer Bitcoin maxi. So that's the start. And something that hasn't been mentioned is cold storage. Always keep in your tokens in cold storage, and don't have anything on any exchange, DApp, anything else unless there's a reason for it to be there. And when there's no longer a reason for it to be there, get it out. Make sure you're self-custodying everything.
Smart. I was going to bring up this one. Yeah, that's a very good point, Tosca. When you do look at their socials, check when they joined, when their account was active. A lot of times these scammers, they're newly created accounts and their profile pictures, etc. You got to be aware that make sure they've been around for a little while. So that's a good point. I'd like to welcome everybody in the chat. Thanks, AJ, for joining us. Tosca as well. Daniel, nice to see you again. Levy, I believe you are in the Bulls Tower community. Thanks for joining us. Glad to see you here. You're right about that dip, cold storage, hardware wallets. Yeah, it's the way to go. If it's something you're going to keep long term, take it off exchange, take it out of your wallets online and into self storage. That way it's safe and you know nothing's going to happen to it. Okay, now I did want to mention a few other facts. I mentioned this to Dip just before the stream, and Cruiser, which I found very interesting. Liquidity pools. Again, I know I keep on coming back to it, but I've looked up a little bit of information now. Over in 2023, as we all know, most of 2023. I mean, early we had a bit of a pump, but for most of the middle of the year, it was pretty boring. The bear market dragged out, but there was over $1 trillion invested in liquidity pools in 2023, which I found was crazy. And that was the number one source of investment in DeFi over 2023. The second sector was meme coins, and then followed by stable coins. I know we had that meme coin run. There was Bonk. There was, Jenna's favorite, Kakinu. And then we had, what was the other big one? Pepe. Almost forgot Pepe. So there was a bit of a meme season in 2023. So those three were the main DeFi investments that people were investing their funds in 2023, which I found kind of interesting. Speaking of sentiment, I know we had a nice pump today. I just want to show my screen here. Good old CoinMarketCap. I'll give it a refresh. Now, even though we had that pretty good pump today and beginning last night, the fear and greed index is still only at 62, which I thought was going to be a little bit higher than that. I was a little bit surprised. I thought for sure it was going to skyrocket up, but I mean, I don't know if that's a good thing or a bad thing. Maybe people are thinking this is a fake pump. We'll have to see. I personally don't think so, and I am going to get Chart's info on that fairly soon, or his opinion, sorry. Okay, so we have let's see, $1.72 trillion market cap currently, which is amazing. $57.64 billion in volume, which is not quite as high as I thought it would be with the way Bitcoin rallied. And a lot of altcoins did as well. Bitcoin dominance, 51.7, that has risen. ETH dominance has lowered down to 16.9. And the GUI, oh my God, gas is high on Ethereum. It'll cost you 120 GUI to do an ETH transaction. No, thank you. Yeah. Stay away from Ethereum, anybody. That's my advice. Okay, I know, Dip, you want to move on. I'm just going to share the usual. I love showing the crypto bubbles. We'll give this a refresh as well. Let's see what we got for the day or this week. Yeah, this DYM. I'll let Chart talk about that one as well. That one kind of caught people off guard. I didn't expect it to do what it did with their drop. But anyway, we have Flare up 32%, Caspa 26.6%, and BTT. That thing just hangs around. It's not going anywhere. 33.4%. And then I'll just have a quick look at the BTC chart as well. For those who can see, it was riding, pretty much this trend for quite a while. And then today and last night, we finally broke out. That's pretty much it for market. Now, Chart, I did want to get your opinion on, well, first of all, today's pump, and then also that other token that seemed to catch everybody by surprise. But what are you seeing in the BTC chart?
I think we're gearing up for that really, really big pump. I think we're just starting that pump because if we were to reject a couple of days ago, we would have rejected at about 44,000, and that would be the height of the right shoulder. Okay, and we didn't. We just went straight past it. So immediately invalidates that head and shoulders pattern. Okay, so now we're just gonna get going, and here's the thing, right? If we have a significant pump here, right into the Bitcoin halving, I hope it doesn't stop at 68,000 or whatever that is, because that will be almost like the first stop, right? And from there, it all depends on where we are in terms of USDT.D, which is a dominance for stablecoins. If it has been dumped all the way to a nice support on the chart, then we got to consider our options. But as long as the stablecoin dominance is still fairly high, between like 5 and 4, right, then we're still okay. But if Bitcoin pumps within the next 3 or 4 weeks and we get like this crazy run, and then we stop, dead stop just before the halving event, and the USDT is at 4%, I would worry. I would be calling it top, which I don't want to do that, because I really hope that we have enough time for like a nice long bull run, right? It does look like, you know, if we're to say that we are going to actually have a long bull run, we will have this inverse head and shoulder formation that kind of ends up and on like $100,000 to $110,000 level for Bitcoin, which looks to be somewhere in, I don't know, maybe June to July, you know. And then funny. We have the regression. Yeah, I was going to say then we normally have the regression just at the end of the summer, right, into September. September is a very bearish month. And then at the end of the year, possibly we have October, right, and then November, and then who knows what happens after that. So it's kind of like what I'm thinking.
It's funny that you mentioned that, because I saw a TA video today, and they were using the Elliott wave, and that's exactly what they had said would most likely happen if it played out. So it's interesting that you align with that theory.
Yeah, I mean, it just makes sense. I'm looking at the chart and just ask myself the questions like, okay, how fast is this pump going to be, right? And is it sustainable? Is like, you got to pair up a whole bunch of charts together, right? Like I was saying in our space today, you got to use total 3. That's the altcoin chart, market cap of all altcoins that are not Ethereum. Then you got to use the stablecoin dominance, right? You got to look at Bitcoin, what's it doing, where is it going, right? All these things make a difference. And I think, you know, I hope we don't have a fast one. Don't you remember in 2020, at the end of 2020, we had like this massive rise in Bitcoin, and everyone was like, holy shit, this is it, right? And then it faded really quickly, or stopped going in mid-January, I believe. Yeah. Right. And then alts had to catch up. And then it took about 2-3 months in order for us to distribute and then fall down again. So maybe we have that, right, where we had the lead up to the halving event, distribute, right? It takes about 2-3 months, and then we have the fall in the summer, and then we know what we happen later on.
Well, 2 other things to consider as well. The analysis video that I watched, they said that even though Bitcoin has been fairly strong, considering all the selling done by Grayscale and FTX, it has held pretty strong. But the crazy thing is, they believe that a lot of the reason the Bitcoin is so strong, the reason it's showing strength, is because of, you know, the ordinals and a few other things that are being built on the Bitcoin blockchain. And the fact that overall new wallet addresses has actually declined by a couple of percent, not very much, just a couple of percent over the last 4 to 6 months. But yet Bitcoin has remained relatively strong. So their thesis is, you know, retail is probably, or not retail, the institutions and stuff is probably what's keeping it where it is now. But once retail does get involved, and, you know, once the FOMO kicks in, it's blast off, so to speak. So it could play out exactly as you said. We'll have to see. And like you said, the USDT dominance has to cooperate. And I am a little bit annoyed though, because, you know, we've been so close to an altcoin rally twice now in the last couple of months.
That's correct. Yeah.
But then Bitcoin just says, no, still my turn.
and like you said about the retail coming in, you know, the retail are coming in not to buy Bitcoin, right? They're buying all the alts and memes and things like that. So, you know, we're waiting for the Bitcoin chart to give us the okay to go, right? And the other thing I forgot to say is we're watching the Bitcoin dominance chart, right? The dominance has to hit a certain resistance in order for it to drop. And then at that point, if Bitcoin is going up and the dominance is dropping, we have our alt using, right? That's the moment we you get it.
And what's that resistance you had mentioned? You mentioned today on your space.
It's close. It's right there. Now it should reject at 54%. Like that will be the third and final rejection. And then from there we can kind of drop off at whatever. But if it doesn't and it keeps going, I don't know. I'll be honest with you. You really don't want a high dominance for Bitcoin, right? No. Nothing over 60%. And if it's over 60%, then it's going to take a while for everything to get going again, right? Because it has to drop down at some point. So.
Okay, so the last thing I want to touch on with you is the DYM. If you can let us know a little bit about it, because I had heard nothing about it personally before. The first time I had heard of it was in your Discord, and heard about the airdrops, and then the price went crazy, and everyone seemed to be really excited about it. Would you give a little bit of information on what that is? I
really don't know. The only thing I saw from just going through CoinGecko is I believe they're doing some distributed computing. As far as I know, maybe I'm completely wrong, but looking at the technical side of the actual trade, it looks okay. It did 2 bearish and 2 bullish moves, so it's gearing up for one more move. I think I said during my space that we should have a jump to another level, and I think that level is up to the 1 fib mark, which is at $12. So if someone's looking for another jump, it should get to $12, all things considered, because if we're not bullish at any point, then obviously things change. But, this is the kind of stuff we wanted to get out of Jupiter, and we didn't. So
yeah,
sucks, but we gotta wait.
Speaking of Jupiter, what is going on with that thing? I can't complain because I did enter into a Jupe USDC liquidity pool. Now, I can't complain on the way the range has been, because it has stayed in range the entire time. I've been earning now it's at 1.04% a day. So I can't complain, because, when Jupe, a lot of people expected Jupe to be very volatile, yourself included, and I probably would have been knocked out of my range really quickly. So I'm not complaining on that end. But as for anyone who's just invested or received the airdrop, they're wondering what the heck is going on. Do you have any insight on that?
Yeah, I mean, like I said today, I think everyone needs to be a lot more patient with Jupiter. Like, this is an opportunity that doesn't come often, right? Where we have what started out as an aggregator is turning into a launchpad, which is turning into a massive decentralized exchange, and with full tool sets for everybody, And one of the things they said multiple times is that people that hold Jupiter will most likely get allocations from these projects that launch on their platform. And so the first test of that was the WEN token, which launched successfully, and it was a lot of fun, and I think it's still going to go over the course of the next few weeks. But with Jupiter, think about it like this, right? For every launch that you get free tokens, which is free money, you're getting actually more Jupiter in essence, because all you got to do is convert that free money into more Jupiter, and then all of a sudden your allocations get bigger and bigger. And so people are very impatient. People don't know how to trade the market. They don't know how to look at the chart. And they're going to look at Jupiter and go, shit, it's at 50 cents. I'm just going to sell it. Well, guess what? It's sitting right at where it's supposed to be sitting right now, and do you want to sell the bottom? Do you want to sell at the moment's notice that Jupiter team decides to announce that, oh, we're launching 3 projects. Here's the airdrop requirements. Oh yeah, by the way, took a snapshot,
Yeah.
And so then you're looking at this going, oh man, what did I do? Right.
Yeah. There will be a lot of people get burned. Yeah.
Exactly. And this is just the start of things. Like they've you saw how much FOMO people were getting with Jupiter in general, right? And how many eyes were on Jupiter this entire time. And think about all the projects that want to launch on Jupiter at this point. I mean, why would you even consider dropping this bag?
Yeah, it makes no sense. And you know what, to be honest with you, Chart, if anyone does drop their bag at this point, they deserve to be left out. That's just my
100%.
Okay, Oxbury, I wanted to ask you, now I know you've been doing a lot of leverage like trading lately. You show a lot of your results in your communities, and you've been doing a great job. Now I wanted to ask you if you have any favorites that you trade. I know Ethereum is one of your favorites, but we had an episode a few weeks ago on trading strategy. So I just wanted to go over briefly any trading strategy that you have, and what's your favorite coin to trade?
Yeah, I've been trading Ethereum a lot lately because it has been super predictable. Given the BTC dominance, I find Ethereum super predictable and have been having a pretty high win rate on there, like 70% on at least like 1-to-3 ratio for quite the time now, I believe, since December. Yeah, Ethereum, Arbitrum is super easy to trade as well. Especially, I love Arbitrum for scalp trading, like on the 15-minute time frame, super predictable as well. As far as for what I think, I've been calling actually for the past couple of weeks that I personally think that BTC is going to do a double top when people are panicking. And I think you remember that from the chat group. I was saying, come on, like it's just a correction that had to happen. I mean, I was calling for this correction. People were like, oh no, it's not going to correct. It's going to continue to go up. No, of course, the fifth correction has to go on. Like it has to happen in each cycle for the cycle to be, fundamental, right? So I see this as the fifth correction in the current cycle, and I do see the double top happening. And yeah, we're gonna see what's gonna happen after that. I don't know yet. Like I just see the double top happening, and the only problem I have is with those big institutions holding so much BTC, essentially they can manipulate it as much as they want. No matter what we discuss in terms of technical analysis, I believe that it's super easy to manipulate, given the holdings that they have right now. So it's when you're trading, I would say it's super important to follow the news and kind of foresee the news that is gonna come and what actions these guys are gonna take. If they're gonna sell, if they're gonna buy, what they're gonna do. Like it's super important, because sometimes, let's say your strategy can pay out super good. Like you can see all the indicators on your chart, and if let's say a big ETF decides to dump a lot of BTC like they have been doing right now for the past couple of weeks, it's just gonna go down. Like that's how it is.
One thing I am bullish on is in the past, up until the ETFs, institutions that own, they can kind of buy and sell at their leisure, and you're right, manipulate the market, which I mean is still going to happen. But now with the ETFs and everything, all eyes are on them. So I know Grayscale has been dumping a lot, and it's made news, and I don't know if there's anything really that the government will do anything about that when it comes to regulation, only being able to sell a certain amount of times, whatever. But the point is, these institutions, they do own a lot, but I think all eyes are on them, so they're not going to just be able to dump freely like they could in the past. So that might be a little bit of a saving grace. I'm not really sure. Dib, did you have anything to add with that? I wanted to ask you what's going on with traditional market as well, if you get a chance to mention that.
Yeah, when you're dealing with spot ETFs, the dumping isn't going to come from the institution itself. It'll be from the holder, same as a Bitcoin panic sell. They'll be just selling their shares of the ETF. So all the spot ETFs is like BlackRock or VanEck or ARK or whoever you're talking about. They hold X amount dollars worth of BTC as that cash flow comes into them, and then if people sell their shares, they sell that amount of Bitcoin at the end of the day or whenever they clear their books. So with the spot stuff, it'll end up being a lot of retail sentiment that's gonna dictate that, where the futures was really high fees, but you can buy at a discount and everything else. This is just one Bitcoin. We buy it now, it costs this much. So that's not really too much of a concern for me unless retail gets scared. Although Bitcoin ETFs, the spot ETFs, are up over 3% on the day. So buying strong. There's a lot of people buying into it.
Okay. Now, I do want to touch on the liquidity pool, just go through some of the ones I have given update. But first, I want to hear from CryptoCruizer. He's got this week's token to smash or pass. He's going to give us a quick overview of it. Chart, you'll be familiar with this one, so I'm curious to hear all about it. Cruiser?
All right, thanks for that. This week, the token or network is the Pith network. I was pronouncing it Pyth for.
Is it Pith or is it Pyth? I always say Pyth as well.
Yeah, so was I until I actually watched their videos introducing it, and they all pronounced it Pith.
Oh, all right.
It is. It was only launched last November 20th, I believe, November 20th, 23, and since then it's become the largest and fastest growing first-party Oracle network. It's built on the Solana code base, simply because of Solana's fast finality. They chose Solana to kind of piggyback. So what they do is they deliver, this is going to be a bunch of numbers really fast here, but they deliver over 450 data feeds, which are updated every 400 milliseconds, to over 300 apps across more than 50 blockchains.
Wow.
So that's why they chose Solana, I guess, because they can, they can succeed at what they're trying to do, and that is lightning fast speeds. And with that, of course, smart contract is only as good as the data that's provided in it. And Pith ensures that the data is accurate and they get it at lightning speed. So it's still in its infancy stages, I guess, in relation to so many other projects. It's only a few months old. But it's growing at breakneck speeds. It is number 87 on the CoinMarketCap ratings right now, sitting at $741 million roughly. Circulation supply 1.5 billion tokens, total supply just shy of 10 billion. And in the last half hour, less than an hour anyway, it's kind of shot up from a couple cents anyway. It's currently trading just under, no, it's now over 50 cents, 51 even. So that is the Cole's notes, the quick summary of what Pith is all about. It's got a lot of potential. I can see why so many people like it.
Yeah.
So yeah, smashing it.
You're smashing it. Okay. What about Jared? I know I don't even have to ask you, but Jared Davidson, smash or pass?
Yeah, it's a big time smash. So yeah, it's an easy smash.
How about you, Ox?
Yeah.
You smash it as well?
Yep.
Okay. Dip?
Well, even though
actually, I wanted to share something with you guys. Today, I had a discussion with a quite interesting individual, and we discussed decentralized password storage. And
okay, hold on. Hold on. You can get to that in a second. We just got to finish our smash or pass. Dip?
Okay.
Even though I'm at the end of the train, I'll still smash it.
I'm the end of the train, and I smash it as well.
Well, you're doing
okay. Sorry, Ox, to cut you off there. We had to finish our smash or pass.
Yeah, I didn't know about this story.
It's okay.
So yeah, I had a very interesting discussion today about decentralized password storage, and this is actually going to be a huge market in the following years, because like a lot of people are going to be storing their their passwords for their funds. Like there's quite huge funds out there, and it's security comes at priority, given, let's say, you're a treasury keeper of a big product, let's say in crypto, right? And you got to store that password. So let's say there's a business which can to be liable for your password, to keep your password, and you pay for that, right? And there is already businesses like that which are making, they're working only with big funds like that, and they're making like over $500 million in profit per year in that, and it's not exactly decentralized. So just think of like an actually decentralized Web4, not Web3, Web4 platform for password storage, which is not located in one server, but used in multi servers, like all across the world, which essentially is not hackable, all encrypted in 256 bits. I think that is going to be, it's going to be groundbreaking, given the future in like having your wallet, keeping your passwords, making sure they're safe. And it's a multi-million-dollar business, and I'm super excited about Web4. By the way, it's slowly starting to come.
Web3 is barely getting off.
Is that zero knowledge stuff? Because as far as I understand, zero knowledge is primarily done in that way, where the information that's proprietary gets put on a blockchain, and only the parties that are involved in that sense can access that information. No one else on the blockchain can. So maybe that's a really good use for zero knowledge stuff to work with passwords.
Yeah, you got it. You got it right. You've done your research.
Interesting. Okay, so let me go over. I'll just share my screen again. I'm going to go over how my liquidity pools are doing. Now, I also wanted to mention on Camino, as with many others, just like Jupe, how they recently had an airdrop for usage. A lot of these platforms, what they're doing now is a system where you collect points. And I'm going to share this one. So you collect points. I'll go to that one first, actually, in Camino. Right. Oh, wrong one. Okay. We'll do this way. So here we are in Camino. Now, as you can see up here in the top corner, this is the points that I've been accumulating. The way it works is when you use the protocol, whether it be creating liquidity or lending a certain asset or borrowing a certain asset as collateral from one that you lend, you gather points. Now, 3.5x boost is the largest you can get. I'm currently at 3.3. So the way this works is no one really knows how long it's going to last. Excuse me, this segment. So what you do is you collect as many points as you possibly can. And then when it comes time for the airdrop, most likely for Camino, it would be a native token. I'm assuming they're going to actually come up with the token of their own. And you will receive an airdrop for that. So on Camino, I will go, this is my portfolio here. I am, it's a very small position. I just have a net value of 6.5 Sol. I have, I'll show this one. This is my Jito Sol. This is my liquidity pool, Jito Sol liquidity. It shows everything you need here, your asset ratio and stuff like that, fees, etc. This one isn't loading for some reason. Let me go into, I've also got, I'm also lending Solana here. Lending what I lend? 2.3 Sol. APY, not super high, but that's not the point. You're trying to collect as many points as possible. So what I did is I, against the value of my 2.3 Sol, I borrowed USDC, and USDT right now. I had USDC and I swapped it into USDT. It just paid a little bit more. So by borrowing and lending and providing liquidity, you gain points, and then those points is adds up, and that's how you end up receiving your allocation for the airdrop. Much like Jupe did, only Jupe did it with your transactions and stuff on the platform. This one's a little bit different. So that's how things are going on Camino. And for the record, it's fairly safe. I mean, you have to worry about the asset appreciating or depreciating for your impermanent loss, but I've make sure that when you do provide liquidity, you do it with a token that you feel is, has long-term life, longevity. It's going to do well in the upcoming bull market. So you don't have to worry about, getting, like if you get into a meme coin or something that just launched, the chance of it going down to zero are a little bit higher, and you definitely don't want to be providing liquidity for anything that has a chance to go down to zero, because you're just throwing away your money. So yeah, I'm pretty secure in what I have in here with obviously with the USDT, with my Solana, and with Jito as well. So I'll move over to Radium as soon as this loads. Here we go. So currently my Radium is doing pretty well. This is kind of my safest one that I'm in. I'm gonna give this a refresh because I am my liquidity I'm providing is Solana USDC, which it is not.
Gentlemen, I will preserve all of your sanities by temporarily leaving. I gotta step away for a few minutes. I will be back.
All right.
Who unmuted him? Okay, so let this join. Let this load up.
You.
Okay, Camino's Radium a little bit slower right now. So let me jump over to Orca instead. Here's my Orca. This is my Juke pool. It's very small allocation again, but it's been doing fairly well simply because of the price has been stagnant. Hasn't really done a whole lot, to be quite honest. And this is currently at 1.09% per day, as I mentioned earlier. Yeah, it's fairly safe. Once Juke does begin to become volatile, it's going to start rising. I do have a fairly wide range. I entered in pretty close to where chart had mentioned the bottom was. 50 cents actually is 49.9999, which is where it's sitting at now. So the hope is that this is the bottom, and then once Juke begins to be a little bit more volatile and starts to trade up, the price will rise. And I've maxed it out, not maxed it, but the top end of my range is at 75 cents. So let's see if Radium has loaded. Still going. I'm not sure what's wrong with Radium, but I'll let this load up. And in the meantime, if anyone in the chat has any questions about liquidity pools or anything, feel free to ask away in the chat. We'll answer them. Oh, I totally missed the private chat. Oh, never mind. Okay, anybody on the panel have any questions about liquidity pools? I can answer real quick while I'm waiting for this silly thing to load. I'm not sure what's going on with Radium right now.
Here's one from Tosca. What's the feature behind these pools?
The main feature is you earn yield. The way it works is, oh, here we go, it's finally loaded. The way it works is you provide liquidity. When you go on to a SEX, centralized exchange, or a DEX, decentralized exchange, decentralized more like it. And when you swap or trade or anything like that, and it shows the liquidity behind it, you're essentially providing that liquidity to be able to make that trade. Now, the good thing about it is you collect that. What happens is the fees that are collected from these transactions, they're distributed among everyone that has provided liquidity in that pool. AJ asks if an LP goes out of range, you rebalance. Yeah, well, see, there's a lot of different strategies there. There's one where, depending on which way you go out of range, if you go out of range on the upside, you get all of one asset. If it goes out of range on the downside, you get all of another asset. That's why it's really important to provide liquidity to two assets that you trust, like you want to hold, basically. Usually, I will do it with a stable coin and a blue chip. So if it goes all the way up to the top end, and I get all of the blue chip that I am in, for example, like Sol, not a big deal. I will go right back in and readjust my range. Exactly. Or if you believe, like if you do your TA, like simple TA is very important when you're doing liquidity pools, because you kind of got to have an idea of what the price is going to do. So if you know trend lines and patterns, and let's say it goes out of range on the upside, but it's just a quick pump, and you're pretty sure it's going to come back down within that range that you had, I wouldn't do anything, because you don't lose any money if it goes out of range. You stop collecting fees. And then if the price does come back down into your range, you begin collecting again. So never get out of your position too quickly if it goes out of range, because chances are it'll go back into that range. And it's happened to me a couple of times, actually. Now, what was that other question? It earns you fees, is basically the whole point of it. So if you put in, let's say you put in $1,000 and you're earning 0.5% a day, you're literally printing money is what you're doing. You're providing liquidity. You're providing those assets. You're lending those assets out, and you're getting a fee for doing so. Ox has earned me a lot of money with his projects. Oh, nice to see you here, MRC. Just follow Ox is getting the love. Ox is getting the love tonight. You're welcome, Tosca.
I mean, Ox better be getting the love.
What are the minimum or maximum requirements for providing liquidity?
There are no minimum and maximum. The only thing you have to keep in mind, like if you only have, say $100 and you want to go in, most liquidity pools, you need 50% of one, 50% of the other. On the generic, let's say I'm going to go into Orca just to show you real quick here. So let's say I wanted to provide liquidity for, I'll pick one of the main, something different. Yeah, I'll just do Sol. I'll do Sol USDC. So let's say you want to provide liquidity. Now you can either choose. Oh, let me go back. Is Orca the wrong? Okay, I'll go here. Okay, so now the way it works is you see down here deposit ratio. So as you adjust your range, so this is the price. Let's say I think Sol is going to stay between $96 and all the way up to $110. As an example, 109. So you can see we're pretty much even. So the whole point of it is to make sure you have a ratio, and it's pretty close to 50-50 of each one. Now, if I was to continue, you can actually, there's a selector on Orca, and a lot of the other ones have it as well, match deposit ratio. So if you only have one of the assets, so let's say you only have USDC, if you select this button here over, and then click max of USDC, it will automatically convert 50% or whatever the percentage is. So it'll be 46.8% Sol in this case. And then you just approve that transaction and automatically converts your USDC into Sol for you. And then the next time is you approve the transaction. So there is really no minimum. Just keep in mind that a lot of these, like some of these pools, especially the USDC pool, the USDC Sol or USDC, any stable and a volatile, the daily yield won't be quite as much. Like Sol USDC, and this one is 0.3% per day, which I say is not very much, but really, if you compare it to traditional finance, it's a lot more. Like it's unbelievable how much you can make. But if you do, so if you're depositing a smaller amount, your daily yield, it won't be huge amounts. You're talking 20, 30 cents. But I mean, instead of just holding USDC in your wallet, and if it's just sitting there burning a hole and not doing anything, you might as well be earning a little bit of money on it, right? But like I say, just make sure you're in a pairing that you don't mind owning one or the other of.
Tosca's wondering, what are the bad case scenarios for LP pools?
It's a thing called impermanent loss. That's really the only bad case scenario. Like if you provide liquidity and select a range, and let's say you do Sol USDC and it goes out of the bottom range, what will happen is whatever the price of Sol is at bottom of the range, when you withdraw your funds, that's the amount you'll get. But I mean, it's the same as holding it in your wallet. Let's say you hold 10 Sol in your wallet and it drops 30%. Well, 30 is a big number. You're going to drop 30% in your portfolio anyway. So they call it impermanent loss simply because you put the Sol in at $100, and then if it drops out of your range to the low side, then you're pulling out your Sol at $80. You know what I'm saying? So, but as for losing all of your money, no. With these type of pools, that doesn't happen. You just have to worry about impermanent loss, which is going to happen if you're just holding it in your wallet anyway. Which DEXs am I currently using? I'm a huge fan of Solana and the Solana blockchain. So my LP pools, I've tinkered a little bit with Pulse. Not a fan. I know the percentages change a lot on Solana blockchain, but on Pulse it's crazy. Like the daily percentages change all over the place. You're going out of range a lot. So I like to stick to Orca, Radium, and Camino on Solana, but there's so many. I mean, the Pulse chain has a whole bunch. Sushi Swap, even Crow with MM Finance. There's a whole bunch of them, but I like to stick to the Solana ones only because I know Solana. I know the way the price action works, and it's one of my biggest holdings. So I have a lot of capital to play around with. But that's me personally. Okay, let's go back to Radium quickly. There we go. So this is my safe one, the Sol USDC. I've been in this one for, man, I couldn't even tell you how long now. It's been a while. My range is between 84.9, so $85 and $115. And if you've been following the Sol chart, you know we've been in this range for quite a little while. I think I had 1550 invested up to 1612, but that's not the important part. The best part is my yield. I've been earning anywhere between, we'll say 9 to 15 per day, and I just come in here every day, click the harvest button, and away I go. It's very predictable, and the yield has the APR, I should say, or APY, has remained pretty steady. Right now, it's actually at the lowest it's been for quite a while. It's been anywhere between now 60 and all the way up to, I believe at one point it was like just over 200% APY, which is crazy. That's when Solana was really volatile. But even 60% APY is crazy on an asset that's appreciating anyway. And then, of course, USDC. Now, down here, I know you can't really see here. I'm going to change. Go here. Okay, so here at the bottom, it gives a breakdown of what your fees are, and on this one you also receive Radium rewards, which I really like. So trade fees is 44.5%, and then you also earn 15.5% Radium rewards, which is kind of cool. Radium is one that I'm bullish on. I think it's gonna do well. It did really well last bull market when Radium was fairly new. And I believe it's even if it comes close to repeating that, it's going to be an asset that will do well as well. So that is great. Sorry, go ahead.
Yeah, we got a question from Flynn here. What about bullish pools? When will it get? I have a feeling that question's for Ox.
Yeah, that question will be for Oxaria. I'm not sure if he is able to speak.
Ox, are you still there, brother? That question was directed at you, my friend.
I thought you guys were hearing me actually. But yeah,
we didn't hear you.
My mic was off. Actually, we plan on releasing the bullish pools, the LP pools, right around Q3. But as I did mention on the previous VC we had in our community, we are going to be pushing to deliver them much sooner. And yeah, I'm super bullish on those. I guess some of you guys are as well. And yeah, right around Q3, we're gonna have them. We're gonna have them. And,
awesome.
Ashley, what do you want to say, Ashley? Go ahead.
No, I was going to let you know somebody asked if we could withdraw the liquidity at any time. Ox.
Yeah, you're gonna be fully liquid. You can withdraw your liquidity at any given time. So yeah, that's solid.
Yeah, just like any other regular liquidity pool, you'll be able. They're fully liquid. You'll be able to pull your funds at any time.
Well, I mean, yeah, Flynn, Ox is like a little brother to me.
No, Ashley, I think you're mistaking it. Like you're our little brother. little G, Ashley.
Okay, so before we move on, I guess that's it for liquidity pools, unless there's any other questions. I don't think there are. Nope. Awesome. Okay, a little plug before we. What time is it? 8:04. Wow, that was fast.
Yeah.
Chart. I wanted to ask you, about the Degens NFT project. Is there anything new coming up? Anything that the audience should know about with that?
For one thing, we're definitely going to try to reduce our collection size. The sake reason that we want to have a smaller community, very exclusive community, and we're working on that.
Okay.
Yeah, I can't give too much alpha on that. All I have to say is, we're definitely trying to reduce our NFT collection by quite a big size. We don't know exactly the amount, but we want to aim for at least 30 to 60.
Okay.
thing
Yeah,
we're
that's what,
doing, and the other thing we're doing is we're putting a lot of effort into Radiated Boys, which is our secondary collection that was neglected for a period of time, including the artwork. So we're working on a few things. So yeah,
Okay.
that's all I have to say.
That's kind of where I was leading to. I know you had touched on it earlier today on your spaces. And for anyone that's not busy on Thursdays at noon Eastern, check out Twitter Spaces with the DGens. But yeah, you touched on it earlier today that you were going to reduce the size, and there's also a trait information thing going on in the Discord. Members get to choose.
Yeah, we're trying to remove some of the traits that are unwanted, and we're trying to, because we don't forget we inherited this collection, right? And so this is not ours up until this point. We want to make it ours. We started with DGen Girls. We minted that collection. That feels like it's ours. And then now we're going to go into all the NFTs that we have and just make them more unique, make them more adoptable. And we want to bring some flair into the NFTs. So we want to remove some of the crazy, stupid traits that some of our boys collection has. And yeah, I'm really looking forward to it.
Good stuff. Okay, we'll go around the panel, see if anyone has any last words. CryptoCruizer, anything from you you'd like to say?
No, well, I'll mention one thing that we didn't touch on tonight, which we had the last couple of weeks. The Bitcoin halving is up to 74 days, a little more than 74 days, sitting at April 23rd right now. So other than that, that's all I got.
We got 74 days. 74 days left until Bitcoin halves. 74 days left until a new beginning in crypto occurs. 74 days left until a new ascension for Bitcoin occurs. 74 days left until a fantastical evolution of cryptocurrency as in general occurs. 74 days left until history in crypto changes for fucking ever. It's a better way of explaining that, I think. Maybe I may be patently insane, but I'm hoping that was a better way of explaining it.
Definitely.
But yeah, but all jokes aside, it's gonna be pretty wild to see what happens. Part of me thinks a lot could change. Other part of me says not much is going to change long term. If I'm being honest, my mind is somewhere in the middle. Time really will be the only thing that tells.
74 days until Ashley is sober. Yes, 74 days until Ashley is sober again.
Yeah.
I just wanted to thank everybody that joined us today. I want to thank you guys for having me. I want to remind everybody to be safe. And if you have any questions, you can always reach out to me, whether that's DeFi crypto related or security related. You can reach out to me on Twitter, on X, formerly Twitter, or on the Axverse Telegram group where we're all on there essentially. So yeah, thank you all for joining us, and Crazy and Why the Dip, Glenn. Thank you guys for having me again. Looking forward to be on here again. For my time, currently it's like 3 a.m. But I stayed online so that I can be on here. It's 3 a.m. but I stayed online because fucking hustling.
Appreciate it.
Yeah, man.
Chart, Davidson, how about yourself? Any last words?
When is the party for Jupiter? I think everyone's waiting for that, right? So we're just watching that. Hopefully it happens maybe this weekend, because every weekend it seems like it's a pump weekend. So maybe there's some bullish announcements on the weekend, and then maybe we could get the party started, because I'm looking forward to it, man. It's been a while since we had nice moves, since nothing else is moving but Bitcoin, right? So looking forward to that.
I'm with you. Mr. Dip, yourself?
No. Nothing really to end the show with. I did like the way we ended last week with. I'd like to do that again, though.
Okay. Yeah.
Yeah, if we can just see what everybody thinks of the chart and what we have expected for till next week. And I guess start with Crazy.
Well, I'm in the boat that Chart and many others are, because we had a lot of sideways action, we had a lot of sideways chop, and the chart that you have there and the one that I showed earlier, we kind of bounced off of that trend line that we've been following for quite a long time. And I think the momentum is going to continue. I think we're going to continue up. We'll have phases of pumps, then with a little bit of consolidation, and then another pump to the upside for a little while anyway.
Cruiser.
Ah, shit, they got me.
So
This
that's
guy
a 1 hour
must
chart.
be-
You know, like, I'll be honest with you, this is short-term bearish, right? And, you know, we would probably see a 50% reduction from the first support spot. So whatever that is, I can't see, it's too small for me. But, you know, long-term, it's looking still pretty good. I think on the daily, it's really, really good as well. So if there's any bearish momentum, it's very short-lasting. So I wouldn't worry too much about it.
Agreed.
Any thoughts, Cruiser?
All that I'll say about what we're seeing there is great for the bags, bad for my trade yesterday.
You're supposed to trade in the same direction as the market.
Yeah, well,
I think I have to say this every week. Stop losses. Everyone needs to set their stop losses.
Hawks, any opinion on what we're going to see for the next week?
Yeah. Most likely, yeah, definitely. I just wanted to add about the stop losses. It just amazes me when I see the notifications about the liquidations and how, like, it just amazes me. Like, how can you put so much money on trades and not have a stop loss? I mean, it doesn't even make any sense not to have a stop loss on such big positions. Like,
You'll have to discuss
me.
that with Jenna the next time we have her on, because she is totally against stop losses. But yeah, not everybody enjoys them. Thank everyone for coming on. This was an amazing stream as always. Chart, thanks for joining us. Ashla,
of course, brother.
Thanks for joining us. Don't forget, before you leave, smash that like button. Really helps, and even leave a comment down in the comment section. It helps the video out immensely. Thank you very much, everybody, for joining.
Thanks, everyone. It was fun.
Always. Thank you, brother.
See you guys next week.
thanks, guys.
There you go, guys.